Seema. Good evening, everyone. On behalf of Daulat Capital, we are pleased to welcome you to Minda Corporation Q1 FY2024 earnings conference call. We thank the management for providing us the opportunity. From the management side, we have with us Mr. Akash Minda, Executive Director, Finance and Strategy, Mr. Vinod Raheja, Group CFO, Mr. Anshul Saxena, Group Head, Strategy and Merger and Acquisition, and Ms. Puspa Mani, Lead Investor Relations. We'll start the call with a brief opening remarks from the management and followed by Q&A session. Now, I hand over the call to Mr. Akash Minda for opening remarks. Over to you, sir.
Good evening, and thank you very much, Abhishek, for organizing this call for us. So, good evening, everybody, and welcome to the Q1 Financial Year 24 earnings call of Minda Corporation Limited. On behalf of the company, I thank all of you for joining us on this conference call, and I hope you are keeping safe and healthy. The auto industry saw moderate growth during the quarter across most of the segments, and two-wheeler and passenger vehicle demand mainly driven by pickup in demand driven by new product launches and rise in demand for SUV-style vehicles, while commercial vehicles and tractors demand remained subdued on the back of strong pre-buying in Q4 FY23 due to implementation of OBD Phase 2 norms and festive seasons. Exports largely seem to be bottomed out with possibility of recovering in coming quarters. Commodity prices have reversed the rising trend and have started to soften from elevated levels. Semiconductor supplies have also eased out, especially on the back of effective supplier management. We expect gradual improvement to continue in the coming quarters. Coming to the financial performance of Minda Corporation, during the quarter, Minda Corporation continued on its growth momentum trajectory with consistent, better-than-industry performance. Our revenues from operations stood at 1075 crores, with a growth of 6.4% year-on-year on the strong product portfolio, solid customer base, and presence across segments. In terms of quarter-on-quarter revenue growth, our domestic growth has been higher than the domestic industry growth, which is in line with our long-term plan due to the premiumization of products and launch of new products and platforms. However, exports were subdued mainly due to the global economic headwinds. In this quarter, EBITDA margin stood at 10.7%, growth of 12 basis points year-on-year, with profit before tax of 63 crores and PBT margin of 5.9%, mainly due to higher finance costs and depreciation on the back of investments in capacity addition and technology, which will accelerate our growth going forward. Profit after tax stood at 45 crores, with PAT margin at 4.2%. Now, I would like to take you all to the key developments during the quarter. This quarter was marked by gaining traction in our in-house development product of two-wheeler smart keys, which constituted more than 15% of the total two-wheeler lock set revenues. With our consistent focus and commitment on R&D and technology and innovation, Minda Corporation filed 4 patents during the quarter, taking our total patent count to 255. During the quarter, Minda Corporation won lifetime orders worth more than 3,000 crores across segments and products and technologies. Out of this, 50% of orders came from the electric vehicle mobility segment, representing our products' growing acceptability and our readiness for electric vehicles. Apart from adding prominent new customers to our EV portfolio, we had significant battery charger order win of 750 crore lifetime from a leading OEM. The company won more than 30 awards at various forums like QCFI, ACMA, CIA, and various customer awards. The roadmap ahead would be to focus on the core products premiumization, growing our share of business with existing customers, and onboarding new customers through focus on technological upgradation via in-house R&D and global strategy tie-ups. We are also working on further strengthening our operational excellence through cost leadership and digitalization of business processes. We are continuing to work upon localization of connection systems to reduce dependency on imports and improve margins. Now, I will take you through to the presentation with the key highlights of Q1 performance. I now refer to the earnings presentation which we have uploaded, and I refer to the page 4, which is sharing about the Minda Corporation Limited. Minda Corporation Limited is primarily into the 5 business areas, which is mechatronics, information and connected systems, plastic and interiors, aftermarket, and green mobility solutions. Our key customers are almost all customers across various segments in IC, engine, EV, two-wheelers, four-wheelers, three-wheelers, commercial vehicle, off-road. We have more than 30 manufacturing facilities globally, 16,000 people, 9 partnerships, and keep focusing on R&D capabilities with having focus in Pune and Bangalore. We have a diversified product portfolio, global customers, strong manufacturing and advanced R&D with 6 decades of automotive experience. I now move on to the slide 6, which is on the financial performance. I would like to share on how the automotive industry has grown. If I look at for the Q1 year-on-year growth, auto industry has grown by about 2.3%, wherein two-wheelers have grown by about 1%, passenger vehicles have grown about 7%, three-wheelers have grown by 24%, commercial vehicles and tractors have degrown. Q1 FY24 was a mixed bag from demand perspective with signs of volume growth, moderation in most segments. In the two-wheeler segment, the slowdown in scooter sales was countered by the pickup in demand for motorcycles, primarily through the changing customer preference in the premium two-wheeler space. PV volumes declined quarter-on-quarter, mainly due to high base, while saw growth in moderation on YOY, driven by rise in demand for SUV-style vehicles and new launches. On the quarter-on-quarter basis, the industry grew by 6.5%, largely based on the 12.1% growth from the two-wheeler industry. Passenger vehicles degrew by 6.5%. Three-wheelers and commercial vehicles also degrew, by tractors almost flat. Going ahead, demand is expected to remain moderate, mainly due to the seasonality, and is expected to pick up with the beginning of the festive season. In two-wheelers, exports are expected to recover gradually going forward. Moving to the next slide, which is on the key highlights of Minda Corporation for the quarter. We have consistently grown better than the industry and performed with revenue growth of 6.4% year-on-year. We have won marquee businesses in our new technology products such as smart keys, wiring harness, instrument clusters, sensors, EV die casting, and others have started production with our customers. EBITDA margin at consolidation levels stood at 10.7%, improvement of 12 basis points year-on-year. Total lifetime order won was about 3,000 crores, with EV constituting about 50% of the order book. One such great order was from a leading two-wheeler OEM. In the case of battery chargers, was 750 crores lifetime order book. We filed 4 patents and won many awards. Smart key for two-wheelers continues to gain momentum with 15% of our two-wheeler offset revenues. We have outperformed the industry with consistently growing revenues and double-digit margins. Moving to the next slide, we would like to share on the truly diversified revenue model. So by geography, India still continues to be our largest revenue share, followed by exports, which is about 8 to 9%, and our overseas operations of Indonesia and Vietnam by about 6%. By end market, two-wheelers and three-wheelers constitute about 40 to 45%, commercial vehicles about 25 to 26%, passenger vehicles about 15%, and aftermarket about 10%. By product, lockset constitutes about 25%, wiring harness about 35%, die casting is about 15%, instrument clusters is about 15%, and others like sensors and EV products are about 10%. Moving to the next slide, our revenue has grown on year-on-year basis from 1,010 crores to 1,075 crores. On a quarter-on-quarter basis, it has been 1,075 to 1,075 crores. At EBITDA, we have grown 8% from 107 crores to 115 crores. and at from 10.6% to 10.7%. At PAT margin, we have gone from 52 crores to 45 crores due to higher interest and depreciation costs. Moving to the next slide, which is slide 10, which is the consolidated performance. As I mentioned, our operating revenue has grown by 6.4% year-on-year from 1,010 crores to 1,075 crores. EBITDA margin has grown from 107 to 115 crores, which is increased by 7.5% and 12 basis points. Our PBT has grown from 71 to 63 crores, and PAT has gone from 52 to 45 crores. Overall, on the domestic front, Q1 industry grew by 2%, while we grew by about 6.4%. Exports continue to be under pressure due to the macroeconomic challenges. EBITDA margin stood at 10.7%. We delivered double-digit margins on the back of increasing efficiencies, streamlining fixed costs, and component localized initiatives in our wiring harness division. Commodity prices have also reversed the rising trend and started softening, and semiconductor supplies continue to ease, especially on the back of various effective supply management and support from our suppliers. Moving to the next slide, which is the business vertical performances. In our mechatronics, aftermarket and other division, our revenue on year-on-year has gone from 490 crores to 513 crores, with EBITDA from 12.6 to 13.1. Here, Middle East exports have been a concern on quarter-on-quarter basis, and they have come down. Margins have increased on 80 basis points year-on-year due to better efficiencies in the lockset and die casting division, aided by continuously rising smart key volumes. Exports continue to remain under pressure. In our information and connected systems, which is the instrument cluster, sensors and wiring harness division, the revenue grows from 518 crores to 516 crores, which is growth by about 8.5% based on the domestic market. And our margin is also about 8.6%, which is due to the employee cost and also ramp up of volumes in our new plants in the wiring harness in Pune and other locations. Moving to the next slide, which is slide 13, on our strategic pillars of growth. Minda Corporation focusing on enhancing our core in the core products of safety security systems, wiring harness, instrument clusters and sensors, die casting and EV products. Focusing on innovation and technology, which is through in-house R&D and joint collaboration with global players. Electric vehicle opportunity, and as I mentioned, all our products are EV agnostic, which is with the rising trend of EVs, our products are going to an increase in content per vehicle and kit value through the electronification and electrification that is happening. And last but not the least, is focusing on strengthening our passenger vehicle offerings through control systems, sensors and interior solutions. Our focus is to transform and become a complete system solution provider and a partner of choice to OEMs, focusing on cost leadership in manufacturing and thought leadership in technology, and premiumization of all our products across segments, and leading to the delivery of better results than the industry and continue to improve our margin profile. Moving to the next slide on our engineering capabilities. We have now more than 500 engineers. Total patents are about 255 plus. From this year onwards, we are spending about 3% into R&D, into new technology. On the right, you can see our technical center Pune, focusing on our core product lines and enhancing our software solutions to our products. Moving to the next slide, which is slide 15, is on the kit value of the electric vehicle mobility. It is a representation of our two-wheeler where all the products of Minda Corporation are EV agnostic and will be offering products in the EV space, irrespective of the engine segment. On the right is the potential kit value that we offer. So in our vehicle access systems and mechatronics is about 4,500 rupees in an IC vehicle will go to about 2,000 to 3,000 rupees by increase. In case of wiring harness and connection system, it will increase by about 2,500. And the new products which are already launched, such as battery chargers and DC-DC converters and EVSC products, is about 8,000 to 10,000. Total potential kit value for EV is about 16,000 to 20,000. These are the only products that we have manufactured and started selling as of now. Below are our EV customers that range from domestic and export all across segments. Moving to the last bit, which is on the ESG sustainability framework. Minda Corporation follows the highest standards of ESG sustainability, which is also available on our website and reviewed by our independent directors on quarterly basis. Moving to the next slide is our corporate social responsibility and how we are focusing to give back to the society across our locations through blood donation camps and other activities that we do. Last but not the least is some of the awards and recognitions that we've achieved from our customers all across. With this, I would like to conclude our presentation and open the floor for any questions. Thank you.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Jyoti Singh from Allianz Capital Markets Limited. Please go ahead. Ms. Jyoti, your line is in the talk mode. Please go ahead with your question.
Yeah, thank you for the opportunity. So my question is on the on the die casting. If you could give the Q1 number for die casting and for the full year. Last year, how much it was, and second is what point do you expect a recovery in the export, and how is the momentum? And when we are seeing full recovery going forward.
Yeah, so I'll take your first question in terms of how we are focusing on the exports growth. So exports are looking at subdued. Now in the first quarter, we have had at least 10 to 15% lower sales from exports based on the geopolitical concerns or other financial macroeconomic globally. We expect our exports to come back from quarter 3 onwards, and that is when the year-end closing happens and more and more sales start picking up for the export market as well. So expectation is to come back from the quarter 3 onwards. So on the first question, which is on the die casting front, last year in quarter 1, we did about 184 crores worth of revenue. And this year we have done about 208 crores worth of revenue, which is a growth of about 13%.
Okay, thank you, sir.
Thank you.
Thank you.
We take the next question from the line of Sridhar Kalani from Axis Securities Limited. Please go ahead, sir.
Thank you. A very good evening. So my first question is on the order wins in Q1, which you have stated is 3,000 crores. If you could give us a segment-wise breakup, like in which division, how much order we have received, if that's possible.
Yeah. So thank you for your question. If I again have a look, out of the 3,000 crores, about 400 crores are replacement businesses and about 2,600 crores are for the new businesses. Exports are about 138 crores. If I look at the mechatronics division, about 14% of about 1,100 crores worth of order has been booked, out of which 14% have been for replacement and 86% have been for new businesses. In the information and connecting systems, it's about 1,050 crores, out of which 70% is for the new businesses and about 23% are for replacement businesses. And other orders, which are about 860 crores, are again, or rather all of them are for the new businesses such as the EV segments and all.
Okay, thank you. And if you could provide us some details on recall any updates that we have from CCI.
So we have already applied in the CCI. As and when we hear anything, we will be making it public the next moment itself. So as of now, the CCI continues to review our application.
Okay. And I'd like to draw your attention to slide number 11, where you have mentioned that margins have decreased by 50 bits YOY. So the impact of margins has been on the ICS division, or is this the overall margins that has taken a hit because of new plant in Pune?
No, so if you're speaking about the mechatronics and aftermarket, again, the EBITDA has come down, again, primarily due to the exports, which are, again, of course, higher profitable. But definitely with the increase in terms of the smart key sales, they continue to be high. If I look at the information and connection systems, it is primarily due to the new plants that have opened up. So hence, our productivity there and all those things are still taking shape. So they will come into effect as and when we gradually go on month.
Okay, so I just needed to clarify whether the 50 bits which has been decreased on the margins, like the impact of 50 bits which is stated, is it on the overall margins or on only the information and connected systems margin? Because in Q1 you are stating 8.6 and again in Q1 FY24 it is 8.6% margin. So the 50 bits, like you all want to state that you all could have improved by 50 bits, but that improvement has been shortened due to the fact of ramp up in volumes at new plant?
So your line is not clear, but it is not, the margin has increased when it comes to quarter basis.
Right. No, I'm talking on a YOY basis. You all have mentioned in Q1 FY23 8.6% margin and Q1 FY24 8.6% margin, right?
Correct.
But in the statement below, you all are mentioning margins have decreased by 50 bits YOY, mainly due to increase in employee costs and ramp up in volumes. So this margin that has decreased by 50 bits, is it only for the ICS or on an overall basis?
No, the impact. So this is again primarily it has been increased in terms of our Minda instruments, which is the cluster and sensors division. However, in terms of the wiring harness, if I look at from the year-on-year basis, this is lower because of the new plant that has come up and the productivity efficiency is there just because of the new plant. So it is in this particular division, not at the company as a whole.
Understood. Thank you. That's it from my side. Thank you.
Thank you.
Thank you, sir. We take the next question from the line of Mr. Abhishek Jain from Dolat Capital. Please go ahead, sir.
Good evening, sir, and congratulations for this set of number in tough time. Sir, my first question is related with this smart key, which contributed around 15% of the overall locking system. So have you won any new business in two-wheeler locking system?
Yes, I will not be able to disclose the name of the customers, but we are winning orders across engines, which is EV as well as ICE engines. So yes, in Q1 this year, we have won a business of about 360 crores for smart keys for one of the leading OEMs in India as well. One of the businesses which is significant.
Now you don't have any presence in the four-wheeler sides in the locking system. So are you looking to enter in that business?
No, that is not correct. We have a presence in the four-wheeler locking systems market in India and exports. So we are under development and supplying to local Indian OEM as well as exporting locking systems overseas.
Okay. And how is the progress of the Asian business in the first quarter?
So for the ASEAN business, I'll give you the numbers. Just 1 second, please. Yeah, so in our ASEAN business, we have a total sale of about 50 crores in the first quarter.
Okay, sir. And my last question is, what kind of the growth you are targeting in FY24? You had mentioned earlier that you are looking the 20 to 25% growth for the next 3 years. So are you intact on that statement, or you will downgrade the numbers?
No, we are continuing to focus and commit on the numbers that we have already shared before, with our outperforming of the industry and growing about 20 to 25%, backed up by the focus on technology and premiumization of the products, addition of new customers, increasing share of businesses, addition of new segments such as exports and aftermarket, as well as focusing on the passenger vehicle offerings as well and increasing kit value. These are some of the areas that how we will be increasing our growth, as well as addition of new products to technology tie-ups and in-house development as well. So that continues, of course. But yes, quarter on quarter, we'll have to evaluate. Like in terms of the way I mentioned in the beginning, that this quarter our domestic sales have been much higher than the industry, but the export sales have been subdued.
Thanks, sir. That's all from my side.
Thank you, sir. We take the next question from the line of Pritesh Chheda from Lucky Investment Managers. Please go ahead.
Yeah, hi Akash. Can you give the color on how much the domestic grew versus the 6% volume growth which you are referring in the presentation?
So our domestic growth has been to the tune of about 7 to 8%, which is quarter-on-quarter growth.
YOY?
YOY has been again much higher. It is I think about to the tune of 12 to 15%.
How much did exports decline?
The exports have declined by to the tune of about 20%.
Okay. And I was just wondering, we had these lifetime order announcements done in FY22, lifetime order announcements done in FY23, and now we have another 3,000 crore in quarter one FY24. So I'm just wondering, for those 2 years, those lifetime orders, they haven't come in commercial stage?
So typically in automotive, when you win an order, it takes about 1.5 to 2 years for the order to come into start of production. And then the first year is typically a ramp-up phase. So when you win an order, it's about 2 to 3 years from then comes the peak value into the sales. That is typically how the automotive industry works as per our experience as well. So when we win an order this year, typically 2.5 or 2 to 3 years from now, we will see the peak value coming into our sales.
Yeah, so you had a 1,500 crore order win in 22 and about 2,600 crore order win in 23. So at least of that 1,500 crore, some numbers should have flowed in this quarter, right?
No, it does not depend on quarter. It depends on the full year. In some cases, for example, in the 1,500 crores, typically we divide it by 4 or 5. So if I typically divide by 1,500 crore order book, it will be somewhere about 350, 400 odd crores that would come in 1 year. Now, out of that 1 year, the start of production can happen in first quarter, second quarter, third quarter, or fourth quarter. So if the order has come in last year, typically the start of production should happen from H2 onwards, and the peak year should be next year, which is FY25.
So, if that's the case, then what what is bothering you on that 20% growth number which you were initially highlighting about based on the order wins that you will grow 20%?
Sir, what is bothering us, or what is the question?
So what is limiting you to call out the higher growth number guidance?
We stand by our commitment, as I just now explained, in terms of our growth based on the 5-6 factors that I've just now explained, that if we look at the full year basis, the growth stands committed. Of course, quarter on quarter, they can vary due to the factors I've just now explained domestically and exports.
Okay. And lastly, any progress on the equity investment that we have done in one of the listed names?
So, as we have also shared, and it's public information, we've already applied for CCI, and the CCI is currently evaluating our application. So as and when we hear something, you guys will be the first person to know public information.
Okay, sir. Thank you.
Thank you.
Thank you. A reminder to all the participants, if you wish to ask a question, you may press star and 1 on your touchtone telephone. Anyone who wishes to ask a question may press star and one on the touchtone telephone. We take the next question from the line of Harish Shah from HS Capital. Please go ahead, sir.
Thanks for the opportunity. I just need a couple of updates from your side. First is with regards to the smart key business. As mentioned that it constitutes nearly 15% of two-wheeler lock set revenue. Would be, interested to know the names of the clients that who we are associated with. That is my first question. And the second question is if you can also provide an update on the component internalization plan which we are having for the wire harnessing division.
Yeah, so I will not be able to give you the exact names against the orders as we are bound by confidentiality with our customers, but I can tell you some of the general names we have won the orders as well as already in mass production, and you can see from the market as well. There are customers like Bajaj, Chetak, Hero, and other export customers as well. And as and when the new customers start coming in, you will see those products in the market. And we have a 100% win ratio of the RFQs that come across our door when it comes to the two-wheeler smart key solutions. So our focus is how we can be still the leader, having 100% market share in this particular segment, and continue to focus on value engineering in order to offer these products all across segments, whether in IC, EV as well. On your second question, when it comes to the component localization, so we again continuously focus on investing in our development capabilities for in-house connection systems. As I mentioned earlier, in about BS4 to BS6 times, we were having about 50 to 60% components made by in-house by Minda Corporation. But then when the BS4 to BS6 came in, we had to start importing. So currently, rather at that point of time, we were importing about 90% of our connectors. But now we are importing about 70% of our connectors in line with our commitment that we've already given before. And our domestic local sourcing is about 12 to 13%, and internal from Minda Corporation component division is about 10 to 15% in our wiring harness component localization. And as and when now we are getting more and more approvals quarter on quarter based on our two-wheeler and other OEMs, we continue to add these products both in IC and EV segments.
Okay. So we expect this localization to improve, like from going in the coming quarters.
Yes, of course.
Okay.
Every quarter on quarter, you may see a small number, but in the long-term horizon, as about two years' time, we have maintained our goal and target to go from a single-digit EBITDA number from the wiring harness division to a double-digit EBITDA number, which we are in line in order to achieve the same.
Okay. Thanks for your reply, and if required, I'll join back with you.
Thank you.
Thank you. The next question is from the line of Mihir Desai from Desai Investments. Please go ahead, sir.
Thank you for the opportunity. So my first question would be on the premiumization, as your company is known for product premiumization. Can you throw some light on what is happening in our cluster business?
Yes, so typically, if you see in an instrument cluster, it depends on segment to segment. If I speak about a two-wheeler segment, analog cluster, or a needle-based cluster, or stepper motor cluster, what we call, it's typically about 600 to 700 rupees. But when you move on to the next generation of clusters, which are smart clusters in the form of personalized, individualized, connected clusters, and more of TFT, they are of course to the range of about 3,000 to 5,000 rupees per cluster. Of course, they are first higher penetration into the EV segments as well as in the higher end bikes. And as and when we get more and more volume and more acceptability, they are now moving into the lower segment of bikes as well. So that is on the two-wheeler segment. When I speak about the four-wheeler per se, in a four-wheeler, now you will all see in the A and B segment, you will have needle-based clusters, which are again typically 1,500 rupees or 4,000 rupees. And if I speak about a TFT cluster in a high C and D segment vehicle, you will have more than about 8,000 to 10,000 rupees worth of clusters. And going forward, these clusters are now coming into a cockpit or an end-to-end pillar-to-pillar cockpit solutions, which are having infotainment and other heads-up display and other driver information system, what Minda Corporation calls. And we are fully geared up and ready, and also displaying our products to customers all across in India and overseas through our partners and in-house technology for catering these solutions in the passenger car segments as well. When it comes to the commercial vehicle segment, of course, they are open to Sky. So there are different technologies available there. But yes, of course, they are also now moving from analog to digital clusters. And tractors, even they are open to Sky. And again, with the rugged application, there is less penetration when it comes to the TFT cluster, just because of the application of the tractor industry. But yes, in time to come, they will also move into the similar aspect. But the cabin tractors, the tractors which are covered fully, where they are moving into the TFT per se, where they are also, Minda Corporation has partnered up with the Indian tier ones and Indian OEMs and already developed clusters and started supplying TFT clusters for their domestic and export models, which are open to Sky as well as in the cabin side for EV as well as non-EV tractors as well.
Okay. So secondly, on the bookkeeping, I wanted to ask that the depreciation figure, if you see it's gone up. So if you can throw some light on this.
So yeah, I'll ask Mr. Vinod Raheja to take up this question, please.
As you will see from our annual report that in the fiscal 22-23, we incurred a capex of about 280 crore rupees capitalized, and so the full year impact of that depreciation, and of course in the coming quarters, the capacity utilization of those should also happen and kick in action.
Okay. And sir, can you please also guide on net debt levels of what you are planning to, and what are the current levels?
Okay. Net debt is it is net debt to equity is 0.3, and as at 30th of June, we have net debt of 480. Yeah.
I'm sorry to interrupt you, sir. We are unable to hear you clearly.
Net debt is 462 as at 30th of June.
Yeah. Yeah. And sir, lastly, as in India specifically, currently the aerospace industry is getting under limelight on Make in India front. So do we see as our company would have any opportunity in that sector also, or that segment?
So we keep continuing to evaluate various markets and options and opportunities, definitely. But yeah, we believe that for us, automotive, there's a lot of opportunity and scope available, so we continue to focus on the automotive segment.
Yeah. Sure, sir. Thank you. If I have further questions, I'll join the queue.
Thank you.
Thank you. The next question is from the line of Devgan Shah from Asit C. Mehta. Please go ahead, sir.
Yeah, hi. Good evening, sir. Am I audible?
Yes, you are.
Sir, I just want to know that, the PAT margin that is coming in these particular quarterly numbers around 4.2%, there is a significant, we have seen a decline. So any specific reason, and moving forward, what's your outlook on that?
Yeah, so as we just now explained, its primary reason is due to the increase in the finance cost and the depreciation. So the finance cost on year-on-year has gone from 8 crores to 14 crores, and depreciation has gone from 32 crores to 39 crores. And our forecast and our interest rate has also increased. So these are the reasons why the PAT margins have gone down. But overall, again, for the year, this should come back to the same levels as we have always done.
And last year, there was one-time tax write back, actually, as you would know. That also had sort of positive impact on the baseline.
Okay, so you are optimistic moving forward that it is going to improve from here on?
Yes.
Okay, thank you, sir.
Thank you, sir. The next question is from the line of Richa Agarwal from Equity Master. Please go ahead.
Thank you, sir. So my question is on the EV kit value that, you have suggested that the potential kit value can go up to 16,000, 15,000. The question is, do we see these gains visible in the increased realizations and at the top line level, or does it also kick in at the margin level? Because let's say from FY18 to, now, the margin is kind of stable at 11%. So let's say 2 to 3 years from now, as these lifetime win orders start contributing, do you expect an improvement in the margin? And if yes, to what extent?
Yes. So, firstly, again, this 16 to 20,000 is not the potential. It is based on the products that we are currently supplying and are in mass production. Of course, in a particular bike, then 100% of the kit value may not go, but this is our complete kit value offering in the two-wheeler segment that we offer in the mass production range. When it comes to the future of the products of the electric vehicle mobility, with the improvement in terms of premiumization, electronification, electrification of our products, definitely the margin is expected to improve with more and more software content, electronics content going up. That is how we expect to grow this. But we do not expect to grow to the tune of 15% EBITDA margin.
Okay. So could you also give us any sense of, capital capex for FY24?
So typically we spend about 5 to 6% of our top line into depreciation, out of which 2 to 3% goes into R&D. About 1 to 2% goes into the greenfield projects or plant operations, and about 1 to 2% goes in our regular and capex maintenance capex.
Okay. Thank you so much.
Thank you.
Thank you. The next question is from the line of Tanuj Khiani from Ventura. Please go ahead.
Yes, sir. I just had one question regarding the effective tax rate. What would be our effective tax rate going forward? And do we have any VAT credit?
So is your question on effective tax rate?
Yeah, and the remaining VAT credit. So can I get some information on that?
Yeah, for the fiscal 23-24, we are expecting effective tax rate of about 20-21% range.
Okay, got it. Thank you.
Thank you.
Thank you. A reminder to all the participants, if you wish to ask a question, you may press star and 1. Ladies and gentlemen, if you wish to ask a question, you may press star and 1 on your touchtone telephone. We take the next question from the line of Rajesh Kumar from Share Giant. Please go ahead, sir.
Thank you, sir, for taking my question. My first question is sir, can you help us by throwing some light on how the EV sales is panning out, and which are the major products in that segment, and how do you see the traction going forward?
Yes. So, again, if you particularly look at the two-wheeler EV penetration in the Indian market, which is close to about 3 to 4%, Minda Corporation's revenue from the EV perspective or the EV segments is typically higher to the tune of about 6%. So it shows that clearly we are going ahead of the industry growth when it comes to EV sales, and our penetration is much higher, which shows our customer confidence in our products, technologies, and capabilities. So if I put into numbers, in our quarter one last year, about 2% of our sales were EV, and in this quarter, about 5.5 to 6% is our revenue from the EV sales from our top line perspective.
So, are you seeing any kind of disruption due to the recent news on the FAME policy on the subsidy in the EV front? So, how do you see it panning out?
So, in the long run, EV is inevitable, from my opinion. EV is definitely going to penetrate more and more. Of course, there will be some short waves that will be there. Last year, there were some fires during the summer. This year, there are some regulatory concerns. Next year, there could be something else. But again, these are all short-term halts, if I may say. But in the long run, yes, definitely EV is the future when it comes to the two-wheeler segment and going beyond other segments, which is bound to grow.
So what are the kind of the margins you are making on the EV segment?
So it depends on product to product. and it depends on segment of the two-wheeler also. So if there are customers like which are mass manufacturers of EV, of course they are not so premiumized in nature. But if there are segments and customers which are higher end of the EV segments, there of course they are using premiumized products where our profit margins are higher.
Thank you, sir, for taking my question. I will come back to the queue for further questions. Thank you.
Thank you.
Thank you, sir. We take the next question from the line of Saral Seth from Insect Securities and Finance Limited. Please go ahead.
Yeah, hi team. Thanks for the opportunity. My question was with regards to the product mix. So we see that the two-wheeler mix has gone up while the commercial vehicles and passenger vehicles have gone down. In fact, even aftermarkets has gone down. So this also has impacted our margins. Would it be fair to say?
So as I mentioned again, exports have been subdued in this quarter. And the domestic sales also has grown by 6%, and most of this has come from the growth of two-wheelers, which is at the rate of 12% shown in slide number 6. So of course, which replicates our 45% of our revenues coming from 2 to 3-wheelers as well. So in the same line, our growth from two-wheelers have also grown in this quarter to the tune of 48% revenue as compared to 44% last year.
Right, sir. That was very helpful. Sir, just to follow up on the previous participant's question on the two-wheeler EV two-wheeler outlook. So with, the recent revision in the FAME 2 subsidies, there has been a volume, subdued volume over last 2 months, but there has been gradual recovery. So any comment on that? Would you take it as a, temporary and, you feel the volumes could come back to historic levels?
Yes. I think it's all temporary, I believe. In the long run, as I mentioned, this is bound to grow. So again, there will be temporary concerns faced by the industry, whether regulatory, whether technology, whether pricing, whether raw material, whether semiconductors. A lot of things. As I mentioned last year, there were some fire concerns, so there was a small blip in the sales. But again, when we compare from year on year, they have grown much more. And again, if I see in the longer perspective, two-wheeler particularly, the penetration is going to definitely grow up to about 10% and 15% and 20% in the years to come, from the current levels about 4 to 5%.
Sir, what would be our the addressable market share in EV segment, in two-wheeler EV segment? What would be our market share in the addressable product market?
So every segment and every product is a different mix for us.
So blended will help, sir?
If I speak about the lockset market, overall in India, we have more than about 40% market share. And again, this can be also translated into the EV segment as well. Similarly, when it comes to the wiring harness per se, we have more than 30% in two-wheelers, again I'm saying. And again, this in the EV two-wheeler space, again, while the EVs are growing up, we have businesses from the large two-wheeler OEMs. And when it comes to clusters as well, so here again in the two-wheeler space, there are two types of clusters as I mentioned in the segment. One in the higher TFT cluster space, and second is in the analog cluster segment. So different segment of customers have different market share when it comes to the products. When it comes to EV product lines such as DC-DC converters, battery chargers, there again we have different market share when it comes to the existing large customers or the startup OEMs as well.
Sure, sir. That was helpful. Sir, several two-wheeler OEMs and passenger car OEMs have launched several new models. Do we have significant presence there in order to, gain market share?
Yes, we have our various products going into the four-wheeler EV customers as well, which again are being launched or are going to be launched by four-wheeler OEMs in India.
Understood. Sir, despite very decent, stable growth, the margins have kind of stabilized at these levels, though you have indicated that the raw material costs are softening. But what would be the key growth lever, to increase from 10.5%, 11% to maybe 12.5%, 13% on a sustainable basis? What could be the growth driver, sir?
Yeah, so we as an organization always have the long-term perspective and long-term view in mind. Of course, quarter-on-quarter variations could be there. Which are again not temporary in nature. In the long run, we expect to grow by about 20% plus. And again, when it comes to the EBITDA numbers, we don't give future guidances, but our goal is to always be ahead of the industry. And we would like to go to about 12 to 30% EBITDA numbers. The major growth levers are basically improvement in our wiring harness division, which is in single-digit EBITDA numbers going to double digits in about 2 years' time. And other segments such as the exports, the aftermarket, premiumization of the products across segments in commercial vehicles, two-wheelers, four-wheelers, lever of EBITDA numbers as well. Focus on all of that with technology along with the cost leadership in our operations. So we are focusing heavily in our operation excellence, how we can continuously engage and involve to increase our productivity levels, reduce our raw material as well as our working capital inventory to help us perform and deliver better.
That was helpful, sir. Sir, my final 2 questions. So, when you say the potential EV kit value at 16 to 20,000, so where are we in real terms right now in terms of kit value for EV, two-wheeler EV?
We are offering 20,000 kit value. So it's not potential, it is actual kit value that we can offer in a segment, including all our products.
That's quite exciting to hear. Sir, on the new product side, apart from what we are offering, industry is moving towards ADAS and those kind of technologies. So do we have patents filed and do we have some kind of products available in that kind of segment? For example, Kia recently launched ADAS version. Toyota has launched. So just wanted to understand, are we moving towards futuristic technologies and products?
Yes, so if you see, maybe not in this presentation, but earlier presentations which are also uploaded online, we have signed up 2 partnerships when it comes to the ADAS space. One is from a company called Right Vision from Israel for two-wheeler ADAS solutions, or what we call ADAS, Advanced Rider Assistance Safety Solutions. And the second is from a company called Dasing in Korea for around-view monitoring solutions as L0 and L1 for the mid variants and the other low variants of vehicles. So we are also investing internally as well in order to come up with these products. Currently, these products are under development and under local adaptation and in the field trials and tests. So that is what we are currently working on, particularly to ADAS. As an organization, we continuously invest in new technologies and products which are going to be premiumized in our own areas. Secondly, we continuously evaluate what are the synergy products in our own product domains such as vehicle access, driver information systems, electric vehicle mobility, connected mobility, and lightweighting. So we continuously evolve and get more and more products which we call synergy products. And then we also continue to evaluate diversification of the products which we can add, whether in four-wheelers or in other product lines, which will give us through partnerships or organically or investments into startups, which will give us additional growth going forward.
Sure, sir. That was very, very helpful. Congratulations once again. I'll fall back in queue.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please limit your question to 2 per participant. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. Ladies and gentlemen, if you wish to ask a question, you may press star and 1 on your touchtone telephone. We take the next question from the line of Neha Sharma from Pearl Global Investments. Please
stay on the line. आप जिस व्यक्ति से बात कर रहे हैं, उसने आपकी कॉल को होल्ड पर रखा है.
Ms. Neha has kept the line on hold. We move on to the next question from the line of Mr. Rajesh Kumar from Share Giant. Please go ahead, sir.
Thank you for giving me the opportunity again. Just one last question from my side. So you have recently filed for a fundraising exercise. So if you can throw some light on the status of the same.
Sorry, can you repeat the question? Your line was unclear, please.
Yeah. So you had recently filed for fundraising. So if you can help me with the status of the same.
So we have taken a board approval last quarter as a resolution or enabling resolution to scout on the fundraising. So we continue to explore, and as and when there is a need, we will definitely come back to the market for that.
Okay. And so in the business question, what is your plan to grow the passenger vehicle offering by Minda Corporation, which is currently at around 14 to 15% of your total revenue? How do you see it going forward in the next 2 to 3 years?
Yeah. If you see maybe 2 to 3 years ago, this was even lower. We've added many products in terms of instrument clusters, sensors, ADAS solutions, interior plastics, shark fin antennas, many other products of vehicle access. Now we're continuously working to add more products in these domains of lightweighting, such as die casting and others that we export as well as supply to customers in India. So we continuously increase our focus on four-wheelers, and in the next 2 to 3 years' time, our target is to take this about from 15% to the tune of about 25%. That's our target by adding new products organically. Of course, inorganically, we can do this much faster, but definitely in a four-wheeler per se, from the time of getting an order to a conversion and an SOP, this takes about 2 to 3 years' time. So our target is go to about 25% in about 4 years' time from now. Organically.
Yeah. Thank you, sir. Sir, my last question is on the commercial vehicle side. I understand that it is a cyclical industry, and roughly 30% of your revenue comes from commercial vehicles. Do you not consider this a risk? And if you consider it, how are you trying to mitigate this?
So, industry is again cyclical, definitely. But I think this has been the way for the last many decades. It's growing, of course, not yet back to the levels of pre-COVID. But with the way India Inc. is going in the next 5 to 10 years, this demand or opportunity when it comes to exports, as well as end consumer moving into premium vehicles, whether in two-wheelers, four-wheelers, and more features of and regulations in terms of safety and other such regulations come in, this industry is definitely bound to go and gives us opportunities, such as players like us, to increase our kit value, get new technology, and give us the desired growth.
Thank you, sir.
Thank you.
Thank you. We take the next question from the line of Naveen Mata from Mahindra Manulife. Please go ahead, sir.
Yeah, hi, sir. Thanks for the opportunity. Just a question with regards to your cumulative order book, new order wins which still have to go into production. Would you have a number that you could share?
Hi, Naveen. No, I'm sorry. I don't have that number which has to go into production hands off. But yeah, we can get back to you with that number on how much order book is yet to go into production, which is under development right now.
Okay, sure. And just I missed your comments on what kind of growth are we targeting for FY24. I think we were planning for double digit. So just what are your thoughts on that?
It continues to be in the line that we have shared earlier, and also committed to deliver those numbers which are much higher than the industry, north of 20%. Of course, as I mentioned, that's on the annual basis, and we are committed to deliver that based on the various factors. Quarter on quarter, there could be definitely blips based on various factors like exports or other such reasons. But in the long run, as well as on the full year basis, we are fully committed to delivering our numbers which are much higher than the industry and giving the desired growth.
Okay. And sir, in your presentation, you mentioned about, in the ICA segment, there was, some challenges with regard to ramp up in the Pune plant. Just trying to understand if that had any material impact in terms of, your top line growth in this quarter?
No, there is no material growth. Rather, we continue to win more and more business in this product and segment and plant. That is where we have set up this plant. So as and when we mature month on month, of course, more and more better productivity goes in.
Okay. So there is no challenge as such in terms of plant ramp up. That is not the way to read it.
No. We are fully functional, fully capable in terms of state-of-the-art facility, fully digitalized within the industry 4.2, etc. Of course, there are new products, there are new development challenges. As I mentioned, there is a ramp up from the customer, as well as there's a ramp up internally as well. So that is where this takes place. But of course, we have our standards, operating procedures, trainings and other such things, which are definitely there, in order to service our automotive standards and customers.
Got it. And just one last one, I think you mentioned your net debt is about 450 odd crores. Can you give me the gross number?
So gross in the end of this quarter is 570 crores.
570. All right. Right, that's it from my side. Thanks so much.
Thank you, Naveen.
Thank you, sir. Ladies and gentlemen, that was the last question for the day. I would now like to hand the conference over to Mr. Akash Minda for closing comments.
Yeah, so thank you very much. Going ahead, Minda Corporation remains focused on strengthening its competitive edge by investing sustainably in R&D with an aim to produce high-quality products that cater to the diverse needs of customers worldwide. Our strategic approach will remain on fortifying our core products and expanding our product and customer base, both by attracting new clients and deepening our relationship with existing ones. Further, stabilizing commodity prices and semiconductor supplies are expected to aid improvement in underlying margins. We are fully poised and confident of margin accretive growth in the coming quarters. Thank you very much.